completing articles under Messrs. Guru Prasad and Co. Bellary. He is presently the senior partner of Messrs. KG Acharya and Company, Chartered Accountants, Bengaluru, specializing in corporate finance, corporate taxes, and company law. He is a member of the Bengaluru Financial Reporting Review Group, formulated under the Financial Reporting Review Board of ICA New Delhi. He was the director on the Board of Directors of State Bank of Mysore, was a member of the Karnataka State Level Audit Advisory Board, was a co-opted member of the Expert Advisory Committee and Committee on Accounting Standards for Local Bodies by ICA New Delhi. He has authored a book titled Internal Financial Control, Practical Handbook on Audit Report on What Can Go Wrong, published by Karnataka State Chartered Accountants Association. He is a regular speaker on accounting standards and standards on auditing, Companies Act, LLP, corporate finance and financial analysis, corporate tax, and tax audit. With this brief, I have great pleasure in presenting before you CA Gururaj Acharya, who will cover today accounting income and taxable income, convergence and divergence. May I now request Pathari sir to present Acharya sir with a shawl and health bouquet. Over to Acharya sir.
Check. Very good afternoon to all of you. It's been my dream to sit next to Pannaraj sir when he is the chairman of SARC, for the reason that both of us come from the same town called Bellary, and also for the reason that he has been my guru in teaching me accounts for CA Inter. Okay. So I take this opportunity, although he honored me by putting a shawl, I take this opportunity of taking his blessings before I start my session. I am highly indebted not only to Mr. Pannaraj, but also his entire family, for the reason that I did my CA from Bellary, and I studied from a hotel. We had a hotel there. And then my hotel was very close to his house. And every night I used to go and go and visit his house and spend quality time with his family. His elder brother, Jayanna, was the one who taught me accounts. Therefore, I am, sir, so happy, and thank God for bringing me here when you are the chairman of SARC. I know how much of struggle he has had in reaching this position. Although he doesn't look aged, I mean, some of you may be wondering that, I look more aged than Pannaraj. There is quite an age gap, at least of 7 or 8 years. At least I am revealing my age. I am 55, 64. So he's 9 years senior to me, maintained very good health. So I can only pray God, Lord, there is a messenger of Lord Venkateshwara here who can directly send the message to Srinivasa, Lord Srinivasa, to give him all good health. That's all I can pray for him. Okay. Having said that, this is a topic which I chose when Mr. Pannaraj said that I should talk something on. By the way, I have my good friends, Mr. Sridhar from Karnataka Bank. I'm incidentally a director in the bank, and he's the DGM of Karnataka. Thanks for coming. I wanted the bankers to know how much of slogging that we chartered accountants do for the sake of, they just say, give us a certificate. And how much of efforts go behind giving this certificate is what you people have to know. That is the reason I always, wherever I go, I ask the bankers to come. Today's topic, Mr. Bhanushekar warned me that, Acharya, what is this? You are talking on taxation. Forget about that. You are actually taxing the participants after the heavy lunch. you are asking them to listen to a 3 hours lecture on taxation. God should punish you. But then I said, sir, I will try my best to keep them away. He said, that is also not good. Give them their due share of sleep. But then let me tell you that I had my due share of sleep. I came at 12:30, went to Palm Grove. I wanted to stay where Mr. Pannaraj stays. I said, book me the same hotel there. So I had my half an hour dose. But I'm assuring you that I will not allow you to sleep for the next 3 hours. Okay, that's my way of introduction. So how do I do that? How do I do that? Start with the brain teaser. Sir, if you want, you can. Yes. Start with the brain teaser. Mind you, before I get into the brain teaser, the topic has been chosen for the sake of Mr. Pannaraj. All of you, I don't know whether you know, Mr. Pannaraj is a chartered accountant who has come through the science route. I mean, he's a BSc graduate. He's a BSc graduate. And people from the science background always crack CA exams faster. I'm sure most of you, because calm people are generally calm. They're generally calm. And after all, science, accounts, all of our subjects are highly, especially costing, financial management. I wouldn't say so much about taxation. All of these subjects, which I just now mentioned, accounts, says financial management, say costing, is highly scientific. Highly scientific. The only subject which is not as scientific is probably taxation. I hope you agree with me. Why is standard deduction 50,000 rupees? I mean, it has been coming up over a period of time. But if you have to catch up with the cost inflation index, it should have been much more. And now, why is a particular thing given and not given? I always say I don't know. It is told in the act, and therefore I go by the act. Sir, I will again not allow you. Who is the smartest of the, maybe one of the girls here? Okay. Please have this. Whenever there is any doubt, I will ask you to open and read. Okay. So Pannaraj is a highly scientific person, and therefore when he wanted me to talk something on accounting and taxation, I felt that the best way to coin this topic was to bring calculus in it. Right? I mean, that's what is A tends to B and B tends. I don't know how many of you had come to Chennai in 1990, learning from Shivakumar sir about calculus and trigonometry. God knows where we use that. But at least having learned that, I thought that this is the one coining I can do in the entire session. The topic is called accounting income and taxable income, convergence and divergence, including ICDS. Maybe we'll talk about ICDS at 4:45. Okay, that is how we are going to talk. So we'll go to this particular thing. I want you to tell me the answer for this. I'll read out the question. A friend of mine bought a used pressure cooker for ₹60. She somehow did not find it useful, and so when a friend of hers offered her ₹70, she sold it to her. However, she felt bad after selling it and decided to buy back the same cooker, mind you, from her friend by offering her ₹80. After having bought it once again, she felt that she did not really need the cooker, so she sold it at the auction for ₹90. How much profit did she make? I can give you a clue. 10 rupees, 20 rupees, 20 rupees, 10 rupees, 30 rupees, anybody? 30 rupees, sir? Anybody for 30 rupees? 30 rupees, 30 rupees, 0 rupees, anybody? 0 also, okay. So these are the possible 4 answers. 10. You are convinced that it is 10. So we have 0. I don't know how many of you for 0. How many of you for 0? Okay, nobody for 0. How many of you for 10? Yeah, we have some. How many of you for 20? We have for 20. How many of you for 30? I have raised my hands for all the 4. Now you know, Sridhar Garu, you want us to certify the financial statements containing, of Reliance Industries Limited, so much of turnover, so much of profit, so much of transaction. For a simple transaction of 4 ABCD transaction, we have got 4 numbers. Right? Now imagine so much of difficulty is there to find out, mind you, This is unfortunately, I'm talking to chartered accountants. This is a 9th standard problem. Obviously, there cannot be 4 answers. There has to be only one answer. What is the answer, sir? So confident? Very confident. Lock kiya jaye? Okay. The answer is indeed 20. So give a clap to yourself. Now, the point is, people who have told 30, I can justify them. I can justify them. Why they said 30? They said they bought it for 60 and sold it for 90. So how much profit they made? 30. Sir, you made a profit. You said 30, sir? Who said 30? Yeah, you said 30. You are right, sir. You made a profit of 30. But you know what you did? When you bought a cooker for 60, you gave it to your son. If I may have to use, you gave it to your son, what he did was, dad of his forgotten. And therefore, what he did was, he sold it for 70. No? He sold it for 70. And then finally, after a couple of days, you said, give me back that cooker. So what the son had to do? He had to buy the same cooker for 80. So your son made a loss of 10. Agreed? So you made a profit of 30. You are right, sir. But now we have to consolidate the financial statements. You know, the importance of consolidation, Sridhar Garu. Please understand, you don't get a sense of the company, if don't get the sense of the activity of the group, unless you look into the consolidated financial statement. Therefore, in Ind AS and IFRS, consolidation is the rule. Preparing standalone is an option under IFRS. In Ind AS, it is not, because India is still company specific or entity specific. So the point I'm trying to say is, unless you consolidate, you are not going to get a grip on the group. Having said that, still there may be people who think that 10 rupees is the right answer. There may be people who think about 10 as the right answer. Therefore, let us use accounting standard 3. You know, what is accounting standard 3, sir? Accounting standard 3 is on cash flow statement. So cash flow statement, I would say one is consolidation, CFS. Another one is also cash flow, CFS. The best way to understand a problem is to say, I did not have money to buy this cooker. So I took it from Falgun sir, 60 rupees. And then I sold it for 70. What happened? I had now 10 rupees in my pocket. I returned it 60 rupees. And then what did I do? I had to buy back the cooker for 80. Now I took a loan of 70 rupees from him because I already have 10 rupees in my pocket. And finally, I sold it for 90 and returned this 70, 20 rupees. Now, if you tell this, nobody can challenge. Can anybody challenge, sir? So this is the best way to explain a given situation. So we have 20 rupees of cash profit. Maybe the mathematical profit is minus 60 plus 70 minus 80 plus 90. Minus and plus the scientific way of calculating. So we have so many ways to calculate it. Can you now give me a different number altogether? What could be the profit other than 0, 10, 20, 30? I just changed the example, Panaraj sir, for your sake. A friend of mine bought something for 60 lakhs, sold it for 70 lakhs, bought it back for 80 lakhs, and finally sold it for 90 lakhs. I'm just increasing the numbers. Can the number be anything different from 0 lakh? Now, of course, 20 lakhs is the right answer. Can it be anything different from 20 lakhs? Can it be anything different from 20 lakhs? Can it be anything different from 20 lakhs? For income tax, it can be different. If you did not do the 194Q, you did not do 194Q, or when you bought it for 60 lakhs, you paid it in cash. Sridhar Garu, you bought it, you paid cash for that. That is not allowed as an expenditure for income tax purpose. So we have a divergence. Or you paid it to any of your relatives. They may say it is a related party transaction, and to that extent, I will not allow. So this is a brain teaser, I thought, just to take away the sleep. Now, let me tell you a couple of things on accounting and taxation. One of the interesting things, sir, section 72, subsection 2, give a mic there, please. Give a mic there. You are okay, right? To be with me? Okay. Section 72, subsection 2, clause 1. What does it say? If I have a brought forward business loss, if I have a brought forward business loss, can I set it off against current year's capital gains? Is my question clear to you? I have a brought forward business loss. Can I set it off against my current year business capital gains? Yes or no? Why no? Why no? Now, I want my friend here. Your good name, please? Shalini. Yeah, please take the mic and read section 72, subsection 1.
Section 72.
Yeah.
Where for any assessment year, the net result of the computation under the head profit and gains of
Sir,
business.
you are reading 72?
1.
1, clause 1.
Yeah.
Clause 1.
Carry forward and set
Yeah.
off.
Ah.
Correct?
Yeah.
Wherefore, any assessment year, the net result of the computation under the head profits
Under the
and
head.
under the
Okay,
head
okay.
profits and gains of business or profession is a loss to the assessee, not being a loss sustained in a speculation business, and such loss cannot be or is not wholly set off against income under any
means-
head of income.
Current year income, it cannot be set off. Current year income can be used against any other head of income. Where it cannot be set off, it becomes a brought forward.
Brought-
Yes, ma'am. Yes, Shalini.
In accordance with provisions of section 71, so much of the loss has not been set off where he has no income under any other head. The whole loss shall, subject to the provisions of this chapter, be carried forward to the following assessment year, and it shall be set off against the profits and gains, if any.
It shall be carried on, set off against the
Profits and gains.
profits and gains. So this is what is the understanding, right? So what would we say? Carried forward or brought forward business loss should be set off only against
Profits or gains.
profits and gains of business. So therefore, can set it off against current year's capital gains. I'm giving an example again. Just I have got 1 crore of business loss, and during the year I made 1.5 crores of capital gains, and still I have a business loss only. I have a business loss. So can I set it off? Can I set it off, Shalini ji? What is your answer by reading the act?
If you have a
Yes. Now this is how, please understand, therefore I said when you started reading, the income under the head business and profession, the loss arising out of the head business and profession can be set off only against income from business or profession. Income for business or profession. Now look at the way, sir, how it has been argued. Now all the chartered accountants, I also for a moment thought that, and technically all of us during our examinations also we have been told that carried forward, brought forward business loss can be set off only against business income. Now how they have put Palganukarava sir, they have told that the asset that you sold, why do you sell an asset, sir? Why do you sell an asset? You are not mad to sell an asset. You generally acquire assets. When you have tremendous amount of loss in the business, probably you sell your assets. And when you sell assets for the purpose of income tax, we put it under different heads of income. We put it under different heads of income, and capital gains is one head of income. Now you ask a accounts teacher, an accounts professor, is it not a business income? Selling an asset out of the land that I've had for my company, if I am selling that land, is it not a business asset? Please tell me, is it not a business asset, sir? Having sold it, is it not a business income? So therefore, 72(1)(1) allows you, please, the starting point he said uses the word head. I don't know, you can underline, even if it is the institute's book, doesn't matter. You underline the word head when he said brought forward business loss can be set off against income from business and profession. He has not used the word head.
the head.
Isn't it? Now, are you convinced it can be claimed? Sir, Falgun Kumar Karu. This is how Karnataka High Court has dealt with this particular situation. Nandi Steels Limited versus ACIT. 267 High Court, whatever it is. Assessee company was into the manufacture of iron and steel for the relevant assessment year. Argued by Shankar. And accepted by the High Court. There was a brought forward business loss. There was a capital gain. Assessing officer, CIT appeals, tribunal said no. Like what you said, sir. No. Okay. 72(1) employs the expression computation under the head profit. It starts with the head. Whereas 72(1)(1), what you read out, does not use the expression under the head. Thus, the legislature has consciously left it open that any income from business, though classified under any other head, can still be entitled to be set off. Are you with me? Now we have filed a couple, after this, we have filed a couple of, please understand, people sell their business assets only because they have losses. And if we come in their way, after all, we are the ones who read the law and interpret the law and tell them, no, you cannot set it off. You tell them, for them, it's a double whammy. On the one hand, they have a loss. And for in a difficult time, they are selling the asset. And on that asset also, you're asking them to pay tax. So this is a fantastic. Now, I will give you 15 minutes rest. You can go to sleep, whoever wants to go to sleep. You are taking home good points and you want to sleep. I leave it the option to you. So shall we proceed? Panara sir, we'll proceed. So this is an interesting case. I thought we will talk about this. The next is, there is an introduction of demonetization in a different manner from 2024 September. You know, slowly they have put a small bomb without telling anybody that it is a bomb. You know what? All companies, all public limited companies, their shares have to be dematerialized. All of us are clear? Their shares has to be dematerialized. Private limited companies, is it a must to dematerialize the shares? Now, private limited companies, there is no obligation to dematerialize, but the good news is, from September 2024, all private limited companies, being other than small companies. Now, what is the definition of a small company? What is the definition of a small company? Very simple, 440. 440, what is 4? Capital, paid up capital is 4 crores, 40 crores is 40 crores is turnover. It used to be 220. It has become 440 from last year. So very good. So small company is a company in which any one of them is breached. Either paid up capital is more than 4 crores or their turnover is more than 40 crores. Then they become a large company. Don't confuse this with the MSME. We'll talk about MSME a bit later on. For the moment, there is a small private limited company and a other than small private limited companies. For other than small private limited companies, their shares have to be compulsorily dematerialized. Now, what happens if you dematerialize? Look at this. In the individual balance sheets, that share investment is not there at all. Whereas they have shown it in the company's balance sheet. Now, so many names, they are the investors. So once it is dematerialized, it is cash in hand becoming cash at bank. Shares in the material form becoming shares in dematerialized form. Maybe immediately it may not be known, immediately, but when it is taken up for the company from there, whether it is shown in the balance sheet, etc., it will be known. So let me tell you what is the provision. What is the provision? Let us understand what is the provision. I was waiting why the secretary is not there. Now there is sunshine in the room. Namaskara, Arun Garu. Okay. Dematerialization of securities for non-small private companies by 30th September 2024. Every private company which on or after 31st March 23 is not a small company, as per audited financials for such a financial year, shall within 30th September 24 comply with the two requirements. What are the two requirements? Issuing securities in demat form. from 30th September 2024, if the company issues the shares, it has to be in dematerialized form. That is the first requirement. Second requirement, and facilitate dematerialization of all its securities. Now, how does it facilitate dematerialization? Anybody knows how a company facilitates? You have to obtain ISIN from whom? From two of the reserve banks. I mean, I call them as the reserve bank. There are two reserve banks for securities. One is the CDSL and one is the NSDL. So these are the two authorities under whom any one of them, you can do it under any one of them or under both. When I would say private limited companies, the cost involved is 40,000-50,000 rupees, 60,000 rupees for getting into the registration. So therefore, maybe companies, if the husband and wife has to do it with one, such that the demat account which those husband and wife hold must also be under the same agencies. It should also be under the same agency. That is the drawback. So having said that, they have to obtain an ISIN number and be ready for transfer of shares under demat. Yeah, so that is what is called facilitation of dematerialization of all its security. Any such private company intending to make any offer for issue of securities or buyback or issue of bonus shares or rights issue after 30th September shall ensure that entire holding of securities of its promoters, directors, KMP are dematerialized before making such offer. Now let me tell you, if the shares in such a private limited company is held by A and B, I cannot force A and B to dematerialize the shares. Please understand. And even now in Karnataka Bank, we are a listed company. About 99% of our shares are only dematerialized. Those 1% are not dematerialized for the simple reason that they have not come for transfers. It is there in the name of A, B, C, D, X, Y, Z. Unless he comes for transfer, I cannot ask him to dematerialize. There are so many people, even in State Bank of Mysore when I was a director, they were saying that the share certificate is so valuable, we want to put a frame and keep it in our house and do puja. I mean, they don't want to dematerialize it. They want to see that thing in the hand. So what I'm trying to say is, if they come for transfer, it has to be dematerialized. Otherwise, it can continue under the material form. But if such a private company is issuing any securities, let us say I'm issuing securities for A and B, then all the promoters, directors, KMP must compulsorily convert it into dematerialized. I hope I'm clear there. Not only issue securities if it buys back securities, if it issues bonus shares or rights issue. Then every holder of security of such company who intends to transfer securities or subscribe to securities after 30th September shall ensure all his securities are. So if he comes for transfer or transmission, I will have to compulsorily tell him to dematerialize it. So I have called it as dematerialization is equal to demonetization. Right, sir? Any questions? Key managerial personnel. Key managerial personnel. The managing director, the CFO, the CEO, the whole-time director, all these people are considered to be the key managerial personnel of the company. Absolutely. Absolutely. The company has to have an ISIN number. And if A and B do not want to transfer, there is no transfer happening. And very interestingly, one of the points which was noted was, in a private limited company, shares are not easily transferable. Shares are not easy. So suppose A comes and sells it to C without the knowledge of the company. It can possibly happen. There is a possibility. I mean, if those of you who are dealing with this matter, I was educated, they say it is possible to freeze. Freeze and transfer can happen only with the permission of the board. So to that extent, it is taken care of. Yes, sir. Yes. Yes, sir. No, you have to refer to Security Contract Regulation Act. Correct. It is told like that. Correct. Securities. Super. a view. No, view, very good view, but yes. Yeah, yes, okay. I always keep telling this. Absolutely, yeah. Thanks for correcting me, sir. I always say that if you have a parent or if you have a child, then you are not small. Isn't it? So you are not small because the moment you have a holding company or you have a subsidiary company, you are not small. Or if you are a Section 8 company also, to add to that. So that is also the 5 companies cannot be a small company. Stand corrected. Yeah. Any questions? Shall we proceed? Yeah. Yeah. So what is happening is if they give, you will show. No, sir, your responsibility. How will you take your responsibility? Suppose he doesn't tell you. Income tax return filing is his responsibility, not my responsibility. I agree. Maybe you are dealing with all compliant parties. You go to Bihar. So all those things will now come out in the wash. Fully agree. We are showing to the extent that we know. There may be situation which they only don't know. I mean, yeah, all those things. Okay. Shall we proceed, sir? Yeah. Okay, sir, I'll do that. No. See, if I said digitization, it will not be as sensational. See, I wanted to make it sensational. In the afternoon session, again, Bhanushekar has warned me, make it sensational. Otherwise, if I say digitization means, yeah, so what? It is digitization. You call it as, I wanted to use the word demon. I should have stopped at demon. That would have been a higher sensation. Okay. Now, this is one thing again, linked up to accounting, has an implication on taxation. I'm sure all of you know that as companies, there is an obligation for every company which is doing its accounting under electronic mode. Now tell me any one company which is not doing under electronic mode, sir. If the accounts are not under electronic, maybe it should be a dead company. And only if the company does not have any transactions, it can have in manual. Otherwise, every company which is doing on electronic mode shall have. There is no concept of small or large. Every company shall have, even the smallest of the companies, all companies maintaining electronic accounts must have this feature. What is this feature? Audit trail. What is audit trail? Audit trail is a feature in the accounting package. Maybe you can explain this better. I mean, normally the juniors in the office will explain the audit trail. Maybe you can explain this better. What is audit trail? She doesn't require a mic only. Fantastic. See, recording not only changes, even who recorded, when it was recorded, when it was changed. And if you have the feature of entering it through a login, all our banks and some of the chartered accounts firms also, when they are working on servers, you have to give the username and password, from which system the change happened, from which user the change happened, when it happened, will all be under, if you take out an audit edit log, you will come to know. All those things will come out in the edit log. So that is audit trail. Now, a couple of things on audit trail, what one should do as auditors, and then we'll talk about its implication on taxation. If the software being used already has this option, needs to be activated. In fact, this was a slide which was made last year, because by now this is of no consequence. You should have anyway done it by 1/4/2023. Restricts administrative rights to enable or disable. Now, what if somebody is authorized to disable the audit trail? So I should have a feature wherein nobody should be able to tamper with that feature of audit trail. Any change to be done only through rectification entries that create a proper audit log. Need for internal and periodic compliance audit instead of year-end audit. Now, what I should have told that in the end. I mean, I'll come back to that. Now, what are the gimmicks that can be caught? What can happen because of audit trail? Number one, negative cash balance is subsequently rectified by entering backdated cash. Normally we have a short cash balance and then that will also be noticed. Then cash transactions entered after year end to adjust 40A3. Panaraj sir, I remember you telling this. What is 48.3 cutoff? What is the cutoff for, let us say, 269 SS? 20,000? 20,001 or 19,999? I think you I reply. So you can only tell that. I know his experience. 1 lakh rupees cash was taken. 1 lakh rupees cash was taken. Recorded, okay. Somebody else, okay, and some empty chair. 1 lakh cash was taken. So 1 lakh cash was taken and he told, I'm going in for a scrutiny. Make it compliant. So what the junior did was, he took a loan of A, B, C, D, E, 20,000 rupees. And I mean, in Kannada we say, I mean, everything has been done properly. No? Yes, he took and opened it and gave it to the assessing officer. He said, I am going to levy a penalty. Did the officer know that the change had happened? Because the cutoff was 19,999 and not 20,000. You understand that particular. So the cutoff for 269 SS and 269 T is 19,999, whereas the cutoff for 48.3 is up to 10,000 you can pay in cash. Up to 10,000 you can pay in cash. So cash transaction entered after year end to adjust profits or 48.3, 269 SS, 269 T and 269 ST. So what is ST? PTE. PTE. Per person, per transaction, per event or occasion. You cannot take more than 2 lakh rupees in cash. Even if it is a hospital, if the patient is dying and he says, please take 3 lakh rupees. Only during the COVID period, they gave that particular window. Otherwise, they are not supposed to take cash. If they take cash, the penalty will be equivalent of the amount received unless you have good and sufficient reasons. Can this be a good and sufficient reason, sir? I'm just asking you. The patient is dying, so therefore I have accepted. Maybe yes, but the hospitals don't go to the extent of legal. Their cashier only will because they have been told not to accept. If it is I know Panaraj sir, somebody has a nursing home, maybe Panaraj sir will tell, no problem, you take 3 lakhs, I will fight it out for you. But if it is a big chain of Apollo, all those big chain, they would have given a SOP and they go by the SOP. So backdated entries after year end to adjust profits. Cancellation of vouchers at the year end to reduce income or reduce expenses. Splitting transactions subsequently to allow disallowances or penalty under income tax. And antedating the sales invoices just to beat the GST. We know some of the situations, January 30th or December 30th sales. But then when we ask them to pay taxes, they'll shift the invoice to February 1st. Let them shift, but all this will be visible. All this will be visible. Whatever, it will be like your strike-through mode in your Word without the option of taking a final. You know what I mean? So to that extent, everything will be visible. Any questions on this? So this is where I'm telling that the moral of the story is, it is very good. Very good for whom? For chartered accountants to market themselves to say, if you come during the year end, you will be having a lot of problems. So there is a need for internal and periodic compliance audit instead of year end audit. Now, if there is any profit planning required or anything that is required, please come and discuss in advance rather than making all the corrections at the year end. Okay. Shall we proceed? Yeah. What is an audit trail? It's a visible trail of evidence enabling one to trace information contained in the statement or reports back to the original input source. Audit trails are a chronological record of the changes that have been made to the data. Any change to data, including creating new data. Shalini, right? Creating new data, updating or deleting data that must be recorded. Records must maintained as audit trail must include the following information. When changes were made, who made the changes, what data was changed. Barbeku. So nice to have the wise chairman And Karnataka Bank is lucky to be between the chairman and the vice chairman. Okay. So which means you have a greater responsibility of sponsoring some event next year also. Okay. Audit trails may be enabled at the accounting software level depending on the features available in such software, or same may be captured. Okay. Now a point on audit. Although I may be going for my subject is between accounting to taxation, I will touch upon audit. The auditors have been given a responsibility to put in the audit report whether this feature is there and whether it has been tampered and whether the records have been maintained for the required number of years. So we have something called an implementation guide given by the institute on this particular rule 11G of the Companies Audit and Auditors Rules 2014. In 2020, please note that 1/4/23 onwards it is required. So for up to 31/3/23 there was no requirement, although the rule said you will have to comment. So what we had to comment as auditors is, as proviso to Rule 3(1) of the Companies Accounts Rules 2014 regarding audit trail is applicable for company only with effect from 23. Reporting under so and so the company's rules is not applicable. That is what we said last year. In the coming year, after 31/3/24, we have to give like this. Based on our examination, which included test checks, the company has used an accounting software for maintaining its books of accounts, which has a feature of recording audit trail, alias edit log facility, and the same has operated throughout the year for all relevant transactions recorded in the software. Further, during the course of our audit, we did not come across any instance of audit trail being tampered with. Stop. We have to say this. From the next year onwards, not 23/24, but 24/25 onwards, we have to add additionally, the audit trail has been preserved by the company as per the statutory requirements for the record retention period. What is the record retention period? As per Companies Act? As per Income Tax Act? As per Institute of Chartered Accountants of India? So as per Companies Act, it is 8 years. As per Companies Act, it is 8 years. So we have to record, keep the audit trail for 8 years. As per Income Tax Act, 6 years. Our institute says all audit documentation has to be preserved. Now we looked into 6 years and we looked into 8 years. So we were in between. So we gave an in between. So an average of 7 years. 7 years. So all your audit documentation has to be set right. Please understand, all your audit documentation under SA 230. Sir, namaskar. How are you? You were calling me for this program only, I thought. If I called you back, then you did not answer. So he called me, I did not take the call. I called him, he did not take the call. Level I point there. We have already connected. Sure. So the point I'm trying to say is 6 years, 7 years, 8 years, audit documentation, what is the maximum period by which the audit documentation should be complied with in the file? My question is slightly different. What is the maximum period by which your audit documentation should be set right? From the date of signing, should it be? That means today I'm signing the financial statements of Karnataka Bank. Should I keep all my documents in the file by, let us say I'm signing it on in July 15th. Should it be all done before July 15th? Yes or no? Yes, my friend is right. Within 60 days from the date you sign the financial statements, you have time to set right your documentation file. So any of your, although please understand, it is not that you can take proof. You cannot take proof after the financial statements are signed. All those things should be taken, but you may stack it somewhere, but everything should be properly punched and put it in the file within 60 days from the end on which you sign the financial statements. Shall we proceed? Now, I'm giving good news after good news. One more good news is coming. That is on backup of accounts. Backup of accounts having an implication on income tax again. Backup of books of accounts for companies. I always keep telling this, backup of books of accounts for companies. If you are a non-corporate, you don't have any problems. That is why we always say we desist people from forming a company. Not only we, even the ROC desists from forming a company. Alva Geeta avare? How you know? The moment you are forming a company, they will give you a SIN number. Isn't it? They are telling you in advance that it is a sin to form a company. And in spite of that, in spite of our telling the clients also, why are you forming a company? They say, no, I want to be a managing director. That's the only place where I can be a managing director. And then you face all 222Es, all your problems, 185, 186, all these, 73 to 76 of the Companies Act, most dangerous sections, deposits, all those things we'll have to go through. And along with that, you'll have to say backup of books of accounts and other books and papers of the company maintained in electronic mode, including at a place outside India, if any, shall be kept in servers physically located in India on a daily basis. This is from 5th of August 2022. What was the change? Please understand, backup was always required under the rules on a periodic basis. What changed is on a daily basis. Now, how many of you are good in DISA, ISA, CISA? All the youngsters, no? Yeah, no, what I want to know is, on a daily basis, today is 11th. So I have taken my backup up to 10th. And tomorrow when I go, can I use the same thing and say I will overwrite on 10th and on 11th I have taken a backup? Is that considered as daily backup, sir? Or every day I have, today you come and tell me on 7th, give me a backup. Come and give me on 7th of January, give me a backup. 8th of January, give me a backup. How do we take it in the bank, sir? Huh? Back end. But any idea? Yeah. So which means 7th also they have, 8th also they have, 9th also they have. Daily backup. Okay. So now my question here for companies is, especially who are using on ERP. Yeah. No, you can't you can make backdated entries, but you can get caught in the audit trail. Right. This is a different question, which can have an implication on audit trail also. It can have an implication on audit trail. But the point is, there is a requirement and the auditor has to comment on this. Where should the auditor comment on this? Will my books of accounts be affected? True and fair will it be affected if I don't maintain this? No, it will not. How will it be affected? See, finally, by 31st March, all the books are ready. So if one day backup is not taken, how will it affect? It is mostly what is called business continuity and disaster recovery. That is the disaster recovery or business continuity plan. So for that purpose, it is required. But I think there is a bigger challenge in it. This is from the national integrity point of view. They wanted it to be a lot of companies who have outside India. They were never having accounts in India. So they wanted to plug that. And in the process, like what Nanya Palkewala says, the government puts a net. And in the process, big fishes get escaped out of the net and small fishes get caught. So that is what has happened here. And I was reading, in fact, how I was understanding this is I have to take a backup. Can I take the backup in a external hard disk? Can I take up a backup in external hard disk? They say shall be kept in servers physically located in India. Is an external backup considered to be a server? So no. No. If it is in a cloud, it will be in some server. That you have to take a certificate from whoever you are working with. Yes, they have to have servers in India. The very purpose of this is to ensure that Microsoft has a data center in India. So that is what it is. No, they have to. By virtue of this, they have to. If you are not able, I don't know where it is, means then you are not compliant. No, I know, but whether it is in India, that's all we want. Na? Whether it is in India, a certificate has to be given that it is correct. Okay. So, but I'm just trying to sensitize this. Now, what happens as an auditor if this is not complied with? If this is not complied with, an auditor, under 143.3 has to give a certificate. What certificate does he give? In the second point, he says, in our opinion, proper books of accounts as required by law have been kept by the company. So far as it appears from our examination of those books, except for keeping backup on daily basis of such books of accounts maintained in electronic mode in a server physically located in India. Mind you, this we had to give last year only, because this is from 5th of August 2022. As on 31/3/23 itself, we should have given this if the company had not taken a daily backup. Okay. Any questions? Yes, sir. Perfect. Perfect. Correct. No, it is relevant, but my question is, there is a statutory requirement also. Earlier, it was a control requirement. Now there is a statutory requirement. Apart from statutory requirement, my question, which remains still unanswered, I have been asking so many people, does daily backup means 7 January, 8 January, 9th January, or if I have the latest and override on that, it is okay. Trail is not an option now. So what people are telling is, even if you override, it is okay because the trail is anyway visible. Trail is anyway visible. I am waiting for a clarification as to what is meant by daily backup. So that, yeah, incremental approach is what we think. But somebody can misinterpret and say that no, daily backup means give me 7th backup. Correct. Not only that, madam, I have been told that people who are using SAP and having a lot of transactions, the moment they give backup, their entire system will become slow. Their entire system will become slow. And they say, for the sake of business, we will take up our backup whenever it is required, but you qualify. Because your qualification is a smaller problem for me to deal with instead of waiting for the system to generally, assist me in my activity. That is the problem. Yeah. Yes. Sir, I started with saying that this particular audit trail and backup is for all companies. All companies which have a SIN number. Yes, sir. Foreign branches is again a point. Whether you have to have a book backup in India is the question, which definitely they will not agree. They will not agree because their country's requirement. So if I consider that as a, what you call non-integrated foreign operation, accounting standard 11 concept, I'm only taking their final thing only for my consolidation purpose, then it should be okay not to have it in India. If it is considered as an integral financial operation, then maybe, yes, this is what strikes to me immediately. Yeah. Agreed. So audit trail. So all entries are passed. Absolutely right. Absolutely right. Quite possible. Just like India is sponsored by so many other big fours. Fully agree. Sir, one person company also. 1% company has a SIN number. Finish. You have given a warning immediately. Even for a 1%. But right, what you said is right. So many companies prepare their final accounts first and then books of accounts. No, partnership for or an LLP. Or an LLP. See, that's why please note that LLP is a way out. LLP is a way out because you are not given a SIN number. Having said that, on a very serious note, they are trying to regulate LLPs also. Lot of your what is that SBOs? What is SBO? significant beneficial ownership. You have to file a Ben 1, Ben 2. Okay. Even for LLP, you have to do that. Even for LLP, you have to do. And our institute is coming out with a separate standards on auditing for LLPs. I mean, I was thinking why, but that is required because this standards on auditing is under the Companies Act. That standard on auditing is under the LLP Act. Yeah. Shall we proceed, sir? Yeah. Now, before I go into that, one very interesting thing which has happened is NAFRA penalizing 50 lakhs on an auditor who has signed Form 10DA. What is the view of Chennai? I wanted to know. Does NAFRA have the powers? Does NAFRA have the powers to penalize any chartered accountant? First of all, we should understand that NAFRA is a creation of Companies Act, right? Section 132 of the Companies Act has given birth to NAFRA. And the NAFRA can exercise its regulatory powers on certain class companies, and that class company means listed companies. Listed companies. Now, can NAFRA penalize an auditor, tax auditor? Now, let's talk about tax auditor. Our institute, sir, there's something called Taxation Audit Quality Review Board, TAQRB, which is finding out any mistakes, just like we have Financial Reporting Review Board. For financial reports, if there are any mistakes, the chartered accountant will be taken to task if it is a serious matter. If it is a simpler mistake, they can issue a guidance. Similarly for TAQRB. In TAQRB, if there is any serious issue, the institute can take disciplinary action. And in the Income Tax Act 271J, what was our 371J, sir? 371J in the Constitution. Again, let me tell you, Pannaraj sir was instrumental in bringing about an amendment in the Constitution, Amendment 371J, to include Ballari as a backward district so that, we get some special status. So 271J, you know what is 271J? Penalty for whom? Penalty for the auditor. Penalty for the auditor who makes a mistake in any of the certificates. In any of the certificates. How much is it, Shalini ji? There I said rupees 10,000 only. Now you can say 10,000 only. Now, per mistake, no problem. Even if there are 4 mistakes, you will be dealing 40,000 rupees. But where is 40,000 rupees? Where is 50 lakh rupees? Now the question is, we had debated this point. Does NAFRA have the authority? In fact, if you read that particular order, it goes on to say that the matter has been referred by the Director General of Income Tax to NAFRA. And NAFRA did a detailed study, and then they said 10,000 rupees, right? 10,000 rupees on an accountant, not a chartered accountant, on an accountant, because accountant has been defined under 288, isn't it? So accountant means a chartered accountant. Now, having said that, NAFRA, the reference has come from Director General of Income Tax. His bombadi was, please look at this, Quest Corp. It's a company from Bangalore. It is actually giving out what they call manpower supply. Manpower supply. Now, before we get into the 550 lakhs NAFRA, let us understand 80JJAA. How many of you are not claiming 80JJAA? I was thinking you are all unlucky. Your clients are unlucky. But now I feel that you are all lucky. Because I have been signing the 80JJ for Form 10DA for a long time. Now, what is this 80JJAA? Because so many places when I go, a lot of companies are not claiming their eligible deduction under 80JJAA. Spend some time. What is this 80JJAA? If you have employed any new employees during the year, you can claim a deduction of their salary, of course. Under which section? Salaries is a deduction under which section? 37. 37 is the right section. We'll go to that. I have analyzed one particular slide only to see which section allows what. Let's talk about it is allowed under section 37. Having said that, now if it is salary, it is allowed. If it is an additional employee employed during the year, apart from his salary, I will be eligible to claim 30% of his salary this year, next year, and afterward next year. That means if I am paying 10,000 rupees to an employee, 10,000 rupees I can debit it to my P&L account and claim it as an expenditure. Apart from this, I can claim 3,000 rupees this year, next year, and next year as a deduction under 80JJAA. But it is not as simple as this. There are a few conditions. This is condition number 1. He should be an additional employee during the year, not for all employees. That means he should be a newly added employee during the year. Point number 1. Point number 2. Point number 2, his salary should be less than 25,000 rupees per month. His salary should be less than 25,000 rupees per month. Can it be claimed by a professional? Initially, 80JJAA started with manufacturing concern, then it went to business, then it went to all assessees, very interestingly, all assessees subject to audit under 44AB. You look into 80JJAA, the starting point. So we'll park 80JJAA and we'll go to 44AB. You look at this 44AB, sir. Some of the companies may not be subject to audit under 44AB. No, but they're otherwise eligible to claim 80JJAA. Who are those who are otherwise not eligible for audit under tax audit? Less than 1 crore, no audit required. Less than 10 crores also no audit required. Most of the software companies, they have additional employees. Most of the software companies have additional employees, and they, just because their receipts and payments, is less than 5% in cash, they don't have to get their audit under 44AB. They are good people, no? Actually, very good people. Very good people saving on tax audit fee, losing on 80JJAA. Now the question that comes out is, can a person who is not liable for 44AB, can he do 44AB audit? Falguni Kumar sir, you are the accountant member of the tribunal. Chappan sir, Miriam sir. Can a person who is not subject to tax audit offer himself for tax audit? Why the situation came out is, a person had forgotten to claim his loss. He was not subject to tax audit. What he did was he subjected himself to tax audit and said, I am filing a tax return, my due date is extended. It was not allowed. There could be a point of conflict because I don't want to disagree with him. He says yes, I say no, but please look into this situation. Sir? Less than 1 crore. Yeah. No, but that is not told. It is very clearly told in 40. Correct. Thanks for supporting me. No, the point is that. But then how will the department know that you are less than 5%? So you're only telling that it is more than 5% and therefore I have put it to audit. This can be a way out. Yes, sir. Yeah. Yeah, that is a different subject. Yeah, there I'm not getting into that much of a deviation. So from 80JJAA, NAFRA, we went to this particular 44AB, whether I am eligible to get 80JJAA. Now I'll go a step further and say, sir, if I may be permitted to take some deviations, this is done under Direct Taxes Committee, right? Direct Tax Committee. A question has come out whether this 5%, you go to that 44AB only, whether this 5% includes capital receipts. So when I see 5%, do I look into only sales or do I look into my, let us say I have sold my furniture that has been in cash. All of you agree, sir? Please, sir, now you are sitting as an institute in the direct tax committee. I will show you on the slide also. In one of their technical guide, they said it should be only restricted to P&L account items. I have written to them. Anyway, coming back to where we started, 44AB, if you are not subject to 44AB, claiming 80JJAA may be a question mark. Now, having said that, for 80JJAA, condition number 1, there should be additional employees. Number 2, such additional employees should have worked in the company for more than 240 days. 240 days. Exceptions have been carved out for garments, leather, and a few seasonal industries. Point number 3, any SSE, including a chartered accountant's firm, I can also claim an additional deduction. But the most important thing is such employees should be covered under Provident Fund. Employees Provident Fund. 4th, they should all be paid salaries in permitted modes. That means if you are, what is permitted mode, sir? 3 plus 11, 3 plus 8. There are 11 modes in which you can pay the, it's called permitted modes. That means permitted modes for all 269SS, 2690, 40A3, 50C, all the quick spaces they have been using account pay check, account pay draft, electronic clearing system, and 8 other modes as told under rule 6. Who are the famous singers, sir? Ma Kalamlo? Abbas and Abba. Abba new ABBA. Famous, I don't know. Yeah. So rule 6A, we remember that. Rule 6 ABBA. Rule 6 ABBA is the rule under which you have 8 modes have been permitted. What are the rules? I mean, I don't know, you will not have the rule. The rule 6 ABBA are credit note, debit note, Beam, Arjun, Raghusan. Okay, so we have 8 permitted modes, UPI and things like that. So why I was telling? So 80JJAA claim karne ke liye, you will have to have less than 25,000 rupees per month. They should be paid in permitted modes. There should be additional employees working for more than 240 days, and they should all be paid in and PF only. And finally, they say a chartered accountant should give a certificate in Form 10DA that all the above have been complied with. If so, you are eligible to claim 30% of that particular salary in year 1, year 2, year 3. So people who are not claiming, please claim. But please claim it rightly. In that case of Quest Corp, what happened, I will tell you. In the case of Quest Corp, yes, sir. Yes, sir. Yes, I am coming to that question. So, year one, I had 100 employees. And out of that 100 employees, their salaries came to about 30 lakh rupees. So, I am eligible to claim 9 lakhs. Now, what sir is asking is, out of that 100, the last 10 employees left in year 2. So, can I still claim 9 lakhs and 9 lakhs is the question. What is your view? $240 days continuously in year 1. Now, he could have started previous. Yeah, that's a very important point, what you said. If he had worked for less than 240 days in year 1, then you can take it for year 2 more than 240 days and claim it for year 2, year 3, year 4. That is clear. But what is his question is, in year 1, they have worked 100 employees. In year 2, out of that 100, 10 have left. So should I not claim that 10 employees, which means, proportionately, if you say 90,000 rupees, I have to give up and claim only 8 lakh 10 and 8 lakh 10, or can I claim 9 lakhs and 9 lakhs? My case is, this case only is there before the tribunal. I am 100% sure that I will win. Where we have claimed 9 lakhs only in all the 3 years, saying that assessing officer has imported a condition. Please look at this. Assessing officer has imported a condition from his notes, which is not there in the Income Tax Act, which Shashikala is reading. Right? So there cannot be a condition which can be imported. How I am arguing is the intent of this act is, I mean, he's arguing if he has left, he is not an additional employee, is his act. My way of arguing it is the department, the income tax has told me you can claim 190% of the expenditure. Instead of government losing it all of a sudden, I'm giving it in bits and pieces. Whether he leaves, just like the condition is there for 240 days in the year in which he starts, he should be there compulsorily for 3 years. There is nowhere such a condition. There is already a precedent in Karnataka tribunal on this, and therefore I am 100% sure it will. Yes. Yeah. 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 Still better. He has completed 240 days. So he started from 1st of April and ended on 31st of December, more or less, something like that. But he's not there in the. So the same rule applies. Because he's not told that at the end he should be there. Yeah. Correct. So, okay, to that extent, it is covered. To that extent, maybe it is covered, but that employee need not be there. There could be a possibility that I have increased. Maybe mathematically what you say is possible. Mathematically, it is possible, yes. Yeah. No. No, I agree that, yeah. Huh? No. See, sir, I'll tell you, I understood the situation. 100 becoming 110. No. 100 becoming 110. So for the 10 employees, you can claim. Maybe 100 had become 112 and 2 people left on 31st of March. So they are not there on 31st of March. So therefore, this condition will curb. So that condition is there. Please understand that this condition is there only for the first year. Subsequent year, it need not be there. No, first year only, maybe you can get caught. That is what I thought twice, and then looking at your force, I said yes, but then I think looking at her force, no. I think what you said is right. Correct. Net employee, see, please understand, once it is taken as an additional employee and you give that benefit, in the subsequent years, you don't have to test whether he is there or not there. Okay, till the law changes. Yes, sir. Okay. 10. No. What they have done is additional employees means only those who have completed more than 240 and comply with all the conditions. Yeah. So which is the question? No. Maybe some of them are 10,000 rupees, some of them are 25,000 rupees. Possible. Yeah. So no, sir, I agree with that. You can give the benefit of that. Yes. $180 days in. He is not an additional employee. In the subsequent year, you have to be a bit louder, or you have to use the mic, or you have to come front. Yeah. No, I don't think. He should be there as more than 240. There is some case law which is a continuous 240, but I don't want to get into that. There is an element of risk in what you're saying. Okay. Yes. This is the last question on 80JJ. We'll proceed. Less than 240, you cannot count him. Yes. Yes. No. That is what it is told here. if he does not complete 240 days in year 1, in the second year, he can be considered as a new employee if he completes more than 240 days. Yeah. Okay. So we'll proceed further. Now, what were we talking on? We were talking on a very important point. Yes, sir. Please. Yeah. Yeah. No, sir. I would say no. Unlike in the case of depreciation, I understand what is your point. Depreciation, if he has not claimed, then you should tell the educator and you can claim it. But 80JJAA, if you have not claimed, he will presume that the chartered accountant has also not given a certificate and therefore it is not. This is my view. Alternative view may be possible. So we were coming to one very important question for T, that does NAFRA have the jurisdiction over, I wish I had the Companies Act here, or although I can put it up. I have it, I will put it up. Does NAFRA have the power to exercise jurisdiction on a tax auditor? What is your view, sir? No, sir, he was not a statutory auditor. So please understand, all these big fours, they want all these certifications to be given by Form 10DA. You put your neck, I don't want to put my neck. The point I'm trying to say is he was not a statutory auditor. He was not a statutory auditor. He was, I know, from Jain, from Bangalore only. Quest Corp is the name of the company. Huh? The profession. It is not actually. Maybe one may say that, in this particular situation, Pawan Jain's case only, Quest Corp, they went to the extent of 3 years, 971 crores over a period of 3 years. Let us say 1,000 crores. 1,000 crores was claimed. And even if it were to be in 25% bracket, the government would have lost 250 crores. 250 crores by virtue of this certificate. And he has given the wrong declaration of additional employees. All these things are fine. I mean, he has made a mistake, etc. But can NAFRA exercise, or should it have been the institute or 271J or DC proceedings from the institute? This is a case of. So can NAFRA get into that is a question. This is what I am coming to, sir. 132 subsection 4. If you have the thing you can see, I will show you 132.4. Because this is very important for all of us to know. Yeah. Yeah, this is 132.4. Notwithstanding anything contained, another sir, affecting the profession at large. I'm just sorry. Not what is 132.4, because you may be asked in so many forums as the institute's representative, how can NAFRA exercise its power against a tax auditor? 132.4 of the Companies Act uses this word, notwithstanding anything contained in any other law for the time being in force. NAFRA shall have the power to investigate either suo motu or on a reference made to it by the Director General of Income Tax. I am importing, but I'm made by the central government, because central government means Director General. Who is central government? There is no central government like that. No? He has to be an authority. So for such class of body corporates, that means it is a listed company. Not for every company, because Corp is a listed company. In such manner as may be prescribed into the matters of professional or other misconduct committed by any member of the firm of chartered accountants registered. And goes on to say that if NAFRA takes over, no other disciplinary regulator can touch that particular case. That means if NAFRA says that he is my prey, others have to vacate office. So in short, yes, because this is, yes. Yes, sir. Correct. This is how the chartered accountants are coming into play. Very importantly, I don't know what NAFRA did on Quest Corp. NAFRA has gone against the chartered accountant, this person. Today, that is what is happening. If there is some mistake which is happening, they will forget about the company, the board of directors. They will come and catch the. That is the point. NAFRA only will get into that. NAFRA only will get into that. That is what has happened. Now you read that order, you will understand. Yeah, enough of 80JJAA. But the point is, on the one hand, 80JJAA is a great boon for reducing your taxes, especially where it is people-centric, especially if it is where the employee-centric. You can claim it and rightfully help the assessees in reducing their taxes. But be very, very careful when you give your Form 10DA certificate, especially if it is a listed company. Or for that matter, any company. Or for that matter, any certificate, be very, very careful. Yeah. Time for tea? I think yes. Now, before we go for tea, I will just tell you one of the very, very important things which you will have to come back and deliberate after tea, which is the implication of dues to MSC, which can have a greatest ramification. From this year onwards, if you happen to have in your creditors list any dues to micro and small, please understand, micro, small and medium, MSME DA Act, Micro, Small and Medium Enterprises Development Act of 2006, I believe, okay, amended in 2020 with the changes in the ceilings. What is micro, what is small, what is medium? 550, 250. 5 crore, 50 crore, 250 crore. And investment in plant and machinery to the extent of 20% of their, which means 1 crore, 10 crores, and 50 crores. So 550, 250. This is how I always keep telling. And close this finger. Why you close this finger? Because in the entire Micro, Small and Developmental Act, all the benefits are only to micro and small. No benefits to medium. No benefits to medium. So in short, you can talk about the benefits to micro and small. Since you can merge them, you can just blindly close your eyes and say, if your turnover is less than 50 crores and your investment in plant and machinery is less than 10 crores, then you are eligible for benefits. One of the interesting benefits before Mr. Sridhar leaves, let me tell you, is that a banker has to compulsorily give. They have got 20% of their entire 18.5% of our A and BC, what you call. What is A and BC, sir? Net available, whatever, banking credit, total out of the total credit that the bank gives, 18.5% of our total credit should be compulsorily given to priority sector lending. Okay, out of which 40% has to be given to the priority sector lending, out of which there is a ceiling for micro and small. If I don't perform that, there will be penalties on me. So therefore, bankers are always behind MSME. This is as far as are traders covered under micro small? Only for the limited purpose of priority sector lending, they are covered, not for any other benefit. What other benefits do they have? One of the greatest benefit that they have is the payments to such a supplier. Supplier means micro and small only, please. Should be done within? No. Within agreed period, which shall not be more than 45 days. Which shall not be more than 45 days. So if your agreed period is 15 days, then 15 days. If your agreed period is 60 days, then it is 45 days. If you don't pay by 45 days, then you will have to pay to such a supplier along with the payment 3 times the interest, 3 times the bank rate of interest, which shall not be allowed under Income Tax Act. That interest will not be allowed under Income Tax Act. Who says that? Who says that this will not be allowed under Income Tax Act? Very interesting, sir. Section 23 of the MSME Act. That is why I always keep telling in the Form 3CD, there are about 97 sections. If you have to certify Form 3CD, you have to be familiar with 97 plus 1 section. 97 section of Income Tax Act and 1 section of MSME Act. So MSMED Act में section 23 says the interest which is paid will not be allowed. Having said that, now there is a very interesting thing which has come out. If there are any dues to such a micro and small industry, it shall be paid within 45 days or latest by 31st of March. 45 days or 31st of March, whichever is later. Let me put it that way. Please understand. Although in the act it has not been put, we can say like that. 45 days or 31st of March, whichever is later. If you don't pay, that particular expenditure will be disallowed. The implication of this we will discuss after tea. Okay? Yeah. Claimed by companies which do AA, BAB, BAC, BAD. Let me tell you the good news. There are, a lot of exemptions and deductions cannot be claimed if you come under BAA, BAB, BAC, BAD. But there are two sections under 80 which can still be claimed, which is 80JJAA and ATM. ATM is basically when you receive dividends and give the dividends to your shareholders. ATM can still be claimed by a company, and 80JJAA can be claimed by a proprietor, a partnership firm, a company which is still opting under the new regime. So these are the two corrections I wanted to say. Yeah, we were talking about this latest change with MSME, micro small enterprises. The question during the tea hour was, interest is disallowed. Will the expense also be disallowed? Let me reiterate. Under section 23 of the MSMED Act, interest is disallowed all these years. But from this year onwards, please be forewarned that if you don't pay to such a supplier does not mean only your purchases. It could be your transporter. It could be your printing and stationery. This is what I wanted. It could be the audit fee also. We'll talk about audit fee at length. But before I come to audit fee, let me tell you the seriousness that it could be in any of your debit side of your P&L account. If that such a supplier is not paid by 31st of March, having exceeded 45 days, let me tell you that if it is 15th of March you made the purchase, then you have got time till 30th of April. Okay. So in short, 15th February is the cutoff. Whatever purchases you made, purchases or taking of services before 15th of February shall be paid by 31st of March. If you don't do this, then that entire expenditure will be disallowed. Although it comes under 43B, 43BH, I believe. Okay. You have got A, B, C, D, E, F. All these are on one side. H is on other side. All these are allowed. For example, what comes under 43B? Bonus. It could be PF, ESI, employer's contribution. Let me be very clear. Employer's contribution, interest to bank, interest to NBFC, to any assets held by railways and you're paying, any taxes. All these things will be allowed till the due date of filing the income tax return, right? All these not till the due date of filing the tax audit report. There is a small gap. Therefore, you are allowed to revise your tax audit report. So we know that. I'm not talking about all these are on one side. This H, which is due to MS, is on the other side extreme, which means if you don't pay by 31st of March, it will be disallowed. And of course, it will be allowed in the next year. It will be allowed in the next year. But let me tell you the implication. I mean, I bought this cooker for 60, 70, 80, 90. You were not there. Geetaji, you missed the cooker problem. But let me tell you, I bought for 1 crore and I sold it for 1 crore 10 lakhs. What is my profit? Simple. 10 lakhs is my profit. What should I pay income tax on? 10 lakhs. Now, assuming this 1 crore purchases, I made it on February 1st and did not pay him on 31st of March. Your income tax will be on GST supply. Now you know so your income tax will be on your, so 10 lakhs of course is your profit plus 1 crore. Plus 1 crore. So you will have to pay income tax on 1 crore 10 lakhs. Somebody may say, next year when I pay, he will allow na bolke. But next year you should be there, no? You will not be there next year, because if you pay 20, I mean, I'm just taking an example of 1 crore. And for a small person, he has to pay 25 lakhs, 30 lakhs, when his profit is 10 lakhs. So please warn all your clients about the implication of this 43B. Now tell me whether it is a good provision or a bad provision from the point of view of micro and small enterprises. Madam says very good provision. Let me tell you. No, let me tell you, avoiding is one thing. This is the worst provision from the point of view of micro and small, because micro and small only will not be able to pay. There is no exemption to micro small enterprises. I hope you are able to understand my feeling from inside. The point I'm saying is micro and small enterprises will be the most affected. So please, 1 second. Yeah, yes, sir. Now, how will you know that he is a micro small? How do you know that he is a? It becomes your obligation to take, both as an auditor and as a buyer, to take whether he is a micro small. Maybe these days we are putting it in the invoice itself. But then a lot of companies are doing like this also. They are taking an undertaking that you are not a micro and small. Maybe if that undertaking is given, I will say you are not. A couple of things on micro small. One of the interesting things is what gets covered if you want to prove that you are a micro small. If your turnover is 57 crores, still you can be a micro and small, because exports are not covered. In this 50 crores of turnover, when I am saying exports are not covered. And secondly, when we talk about investment, it is the return on value under Income Tax Act. Initially 2006, it was the purchase value. Now they changed it to return on value. And one more very interesting thing is, if you cease to be, Palgun Kumar sir, if you cease to be an MSME, you continue to be MSC. Let us say in this year, I did not have exports, but my turnover was 55 crores. There is one notification in 2022 which says, for non-tax purpose, you continue to be an MSC for 3 years. This is the one. I can show the certification. You can go to Google and press notification number, you will get it. But of course, you should know the notification number. But the point is, yes, you can continue to be MSC for the next 3 years. Talk about questions. Any questions, sir? Serious. This can be very serious. So please. Yeah. There, my answer is no. For the reason that what have you claimed it as an expenditure of this year? So therefore, it is not any expenditure that has been claimed can be allowed. I mean, can be disallowed. If you are not claimed that expenditure, it is starting from the opening balance. Accountant member, sir? Right. When did you account it as purchases? When did you account it as your expense? No, if you accounted it in the next year, it doesn't matter. You have not accounted it safe. Then one more thing before I forget, sir, let me tell you, if he has supplied and not given an invoice. Now there is one rule which says that if you have not rejected within 15 days of his supply, it is deemed to have been accepted. That is also built in MSMED Act. Yes. This is what it is. If it is disputed, no problem, but you should dispute it within 15. To that extent, maybe you would not have taken it as an expenditure. You cannot have dispute on the one hand and claim it as an expenditure on the other. So therefore, we'll set it off. Sir, 45 days from the date of receipt of goods. Receipt of goods. I mean, the day you book it as an expenditure, in short. Now, my point is, sir, see, it is actually date of receipt. I mean, there cannot be invoice date. Invoice, he has put some date and you have received it after 45 days only. What will you do? So therefore, sorry? Correct. Within 30 days from the date of, no, within 15 days. within 15 days from the date of receipt of the service, you should put your objection. Under GST law. Okay. Correct. If it is a capital expenditure, then for the moment you are safe. Because if you remember 40A3, 10,000 rupees, we always used to say doesn't touch balance sheet items until they changed the section 43. Explanation in section 43, which goes on to define what is your cost. There they said, provided that any expenditure incurred in capital more than 10,000 rupees will not enter the block itself. For that, they have not told. Yeah. Yes. Events occurring after the balance sheet date, AS4 will apply. As a tax auditor, because now under 43B, I have to now quote whether it is allowed. So I'll have to look into that. So for for March 30th, 45 days from there until there. Huh? Maybe 15th of May. No, aging of the supply. Aging of the supply. That's what it is. 15th February is one cutoff. Then for 16th February, April 1st, 17th April 2nd. No. You may buy throughout the year, but this 43B says that it should be paid before 31st of March. Whatever, you buy it on 1st of April. If you pay it on 31st of March, you are safe. Yeah. So then you have got 15 days, 45 days from then. Correct. Correct. Sir, in 43B, forget I talked about A2 whatever bonus. Will we not look into and say that after the balance sheet date it has been paid and therefore it has to be allowed? So it is like that. It is in my own interest. Otherwise, the assessing officer will say all MSCs I will disallow. All dues to MSCs I will disallow. Yeah. Yeah. No, assessing officer will do one thing. Forget about 3CD. He will come to balance sheet, dues to MSC. Please note, dues to MSCs we have to specifically give for companies, for non-companies also. Even for non-corporates, it is a requirement coming out of MSMED Act. The dues to MSCs has to be shown in the financial statements. So from that he will take and say, I am going to disallow all this. Then it is the burden of proof is on the assessee to prove that no, I have got still time up to whatever date. How do you prove that? By giving a tax audit report. I say 15th May if you bought it on 31st of March. Yeah. No, you will not disallow because you paid it on 15th of May. Then you have to disallow. Yes. No. What it says, if you read now 43B, if you go and read, the entire meaning is what I said. You have been given up to 31st March for all days where 45 days is breached. As on 31st March, if 45 days is not breached, you are given time up to 45th day from the date of acceptance. From the date of acceptance. So if you paid on 20th of May, you have breached the 15th of May issue. Yeah. Yes, sir. Yeah. No, sir. Depreciation is a subject matter of cost. Cost may they have not touched unless they touch it like 40A3. That's what I told you. If we talk too much next year, Sitaram Mami, they say. Yeah? So we'll do that. Yeah. Correct. No problem. Who is giving the undertaking? He is giving the undertaking. So if he is giving the undertaking, I am going by his undertaking. See, he may be an MSc. This is what is happening in the real life situation. Big companies are saying, no, you are getting the registration certificate to prove that he is an MSc. But to prove that he is not an MSc, if we say that I am not an MSc, he is giving an undertaking, that is a good enough to say that other than MSc. No, it is that I will take MSc. Auditors will have to certify based on his undertaking. See, please understand, I will not as an auditor look into every supplier. I will go by a test check. For that test check, if I am being proven, then I go ahead and finalize based on that. Only on the outstanding. Perfect. Only on the outstanding. If it is paid, sir, please, if it is paid by 31st of March, I don't even have to break my head whether it is paid within, but to the extent of creating interest liability, I may still have to break my head. But for the purpose of 43B disallowance, I don't have to break my head. Yes, we have spent enough time on 43B, this particular section. Please take it back to your clients. It doesn't stop here. Otherwise, tomorrow, please understand, in your tax audit report, you will disallow. And in your computation, you have disallow. This point you should have told me before. No, I would have paid. Whether he would have paid or not is another question. But then he will shoot the messenger instead of shooting the message. Yeah. Yes, sir. Okay. Super. My very, very favorite question this is. See, what I have claimed as an expenditure is 100. How should I disallow 100 or 118? What is your view? 18 is ITC, right? This is where read section 145A. Now you understand the importance of 145A. What is 145A? All should be in. Read 145A. Yeah. How do you know in what context it was told? No. You cannot say it doesn't apply here. 145A. Madam, please read 145A. It very clearly says, yeah. Give her the mic, no? Yeah. Very clear, sir. Yeah, you go on. I think you don't need a mic also, but for the sake of recording, I wanted. Yes.
Profession.
Sir, for the purpose of charging income under profits and gains of business or profession,
The valuation of inventory shall be made at lower of actual cost or net realizable value computed in accordance with
lower of.
net actual cost or net
Very interesting. I just wanted to just, by the way, cost or net realizable value. Accounting standard 2, cost and net realizable value. Cost or cost and here uses the word lower of cost or net realizable value. AS2 uses the word cost and net realizable value, whichever is lower.
Same only, no?
Same only. Please understand, has pointed out this as an issue. Accounting for 145A and ICS uses the word or. The auditor in the tax audit report is using and. I just wanted to bring that point. For tax audit purpose, you have to use or. For accounting standard, you have to use and. Anyway, that's the point I wanted to say, playing with English here.
Computed in accordance with the income computation and disclosure standards notified under subsection 2 of section 145.
Yeah.
The valuation of purchase and sale of goods.
Valuation of purchase, sale of goods or services or inventory shall all be inclusive of taxes.
Shall be adjusted to include the amount of any tax, duty, cess or fee.
This is what we talk about as inclusive approach. Whereas in accounting standard 2, we say excluding those taxes which are subsequently recoverable. So all your tax purpose, tax accounting purpose, I mean, I would use the word tax accounting purpose, although ICDS started off as tax accounting standards initially. Then they said there is no accounting in tax, so therefore we will not talk about it. So they said all it is, you have to follow 118 as a debit and claim 18 as an expenditure if it is paid within the due date. Now, if you see your GST also, if you don't pay it within the due date, you'll have to disallow under 43B. Why? I have not debited it to my P&L account. Why should I disallow it? The reason is you are supposed to under 145A, and therefore it has to be disallowed.
When I did claim an expense.
No, madam, it is not a question of you didn't claim. You are supposed to debit 118. You are supposed to debit 118 and claim 18 as an expenditure. That is how the accounting happens. Yes?
No.
No, you are not doing that. See, please understand. You are normal. Yes, sir. I think.
The institute has given either inclusive method or exclusive method. The 145 presumes inclusive method.
Correct.
Imposes. That is because your sales also on 110, 18% you would have got. That means 119.8 you would have collected. Both income side and expenditure, you removed it. It doesn't mean that for expenditure sake, the deeming provision will not be there. Are you able to follow? Because you are not debited, you are taken directly to balance sheet that GST account.
No, let me tell you. See, what is happening is, for the purpose of accounting, you are following 100 debit. Let me, since you mentioned this, you are important for me because you helped me a lot. I'll tell you. Accounting, when you purchase 118, that is your bill. You know how you account in accounting? 100 rupees gets debited to P&L, 18 gets debited to ITC account, right? And then when you pay, whatever you know. For 145A purpose, what you are supposed to do is 118 is your debit. Your debit only should be 118. Please know, closing stock. How do you value closing stock? For the purpose of accounting, closing stock will be purchases 100. So closing stock is 100, right? In income tax, your purchase is 118, your closing stock is 118. That is how we say it is tax profit neutral. Because, I mean, I will show on particular Berger Paints, it has been held by Supreme Court also, that what goes up is upped with the corresponding debit. Therefore, it is profit neutral. So you follow exclusive method or inclusive method, it is profit neutral. But just because, sir, your good name, sir? Ramachandran. So Ramachandran sir rightly said, because of such thinking, they said it has to be followed on inclusive method. Otherwise, you will always say, I have not debited. Why should I disallow it? You are supposed to debit and supposed to credit it. You know, that is how it is. Correct. No, we have bigger issues, sir. We have bigger issues. For example, my turnover is 99 lakhs in a company. And with the GST, it becomes 112. Should I do tax audit? Yes or no? There, our institute in the guidance note says, look into the regular method in which their books of accounts are maintained. If it is normally without tax, then you can exclude tax. So that is the answer which is given. Yeah. Shall we proceed? Yes, sir. No, there is no way out, sir. There is no way out. You please pay. His question was, should I disallow 118 or should I disallow 100? The answer is you have to disallow 118. 118. Please look into this. Your MSc dues is 118. Your MSc dues is 118. That's it. Suppose you pay out of 118. Some companies also do this. I will pay your GST only after you show it in your form 2B or whatever. Then I will, whatever I have paid to that, it's disallowed. Please, I'm just telling you that this is a serious thing. Go and tell your clients about the implication of this, especially to MSCs only. I think so. Instead of sending Shankranti greetings, please send this as a serious thought, serious issue, so that they correct it. Now we come to your point. Sir, sorry, please. Sir, that's why I asked her to read value of purchase, sales.
For the
Sir,
purpose of valuing the stock.
where did it say? No, sir, it did not say that. It is, it doesn't say for the purpose of inventory. It is for all purposes, sir. It is all purpose. Now I come to a very important point, what you raised, sir, saying that provision for audit. We talked about audit fee. Say I have 5 lakh rupees provision. Does he pay by 15th of May? When do we create the provision? So all audit fee provisions, should it be disallowed? So I'll park that answer and go to the next question, whether provision for audit fee is a provision created under accounting standard 29. Sir? Oh. Yes. Yeah. Are you doing like that, sir? No, I'm just asking this. I'm asking this seriously. It's not a. I am doing that. And my peer reviewer caught that as a big point and said that, I said, you prove that it is payable on 31st of March. I mean, it may be an expenditure pertaining to that period, but I have not rendered that. We changed this system from the last 10 years in our office, saying that I'm not going, whenever I raise a bill, I will raise a bill after I sign the balance sheet. Till that date, it is not done. It can be argued both ways, saying that it is pertaining to that year. Therefore, provision should be made. Okay. Yeah. Correct. I will disclose the audit fee, what was paid in year 2. But see, in short, year 1, there is no provision. Correct. No, I fully agree with you, madam. But I'm saying the auditor has not rendered his services in year 1. No. Point is, no. Let me tell you. Please, then you can. Yeah. Okay. Yeah. Yeah. Sure. Thank you, sir. I think the right side is with me. Ruling party. Yeah. No. Therefore, sir, to come out of all these problems only, I have shifted to that method. Otherwise, every year TDS they make, every year I have to carry forward. So therefore, I'm saying, don't make TDS provision. Don't. This is what I am doing. I leave it to you. But the point, sir, No, I'm not making anything. That's what I'm saying. No, sir, where is the matching concept? Yeah. No, sir. I already answered it. So therefore, Ramchandran sir, for this purpose, because I am following him, so you should leave me. Yes, sir. Last question, and then I have to forward. Yeah. How will it be a prior period item? No, I am raising the invoice now. Sir, now I am coming to I will allow all of you to follow whatever you're doing. See, please understand, if we are not auditors, bankers have one advantage. Sridhar Garu, bankers have one advantage of pickpocketing the customer. You understand? The account is with them. Penal provision, they just take and say, they send a debit note only. They take the money first and then like that, auditors have also an advantage of creating the provision for audit fee without the company knowing it. Right? I'm just putting that. But for this, only when the bill comes, they would have accounted it. But for the auditors, only when the bill comes, they would have accounted it. Having said that, please do what you are doing. I am doing it for the convenience of TDS matching. Having said that, my question is provision for audit fee, whether it is a provision created under accounting standard 29, yes or no? Why possible obligation? No. Like provision for rent. Let me extend it. Provision for rent. Is it a provision created under accounting standard 29? The answer is a big no. The reason is, please understand, it comes out of accounting standard 1, accrual. Accrual. What is a provision? Provision under accounting standard 29 very beautifully is told in IFRS and Ind AS more than in accounting standard. Accounting standard says provision is a liability using a substantial degree of estimation. Using substantial degree of estimation. In provision for rent, is there an estimation involved? Therefore, it comes under accounting standard 1, ICDS 1, where accrual is an accepted method. It is actually outstanding expenditure, sir. What you thought and Jayana sir thought. Outstanding expenditure and not a provision is a loose word which we use. In Ind AS and IFRS, they use a beautiful term. What is a provision? Provision is a liability where the timing or the amount is uncertain. Any one of them is uncertain, then it becomes a provision. Where it is certain, it is not a provision but a accrual. Now, having said that, tell me provision for audit fee, will you disallow under this? Because all of us are MSCs only. Maybe micro only. Now, in my case, that doesn't arise, sir, because I am not debiting at all. In all your cases, now you tell me, madam, what will you? No TDS is one thing. No, I don't know. I mean, this is a point which, sir, what is your view? I don't have an answer for this. Maybe one way to say is, don't call it as dues to KG Acharya and Company or dues to ABC Company. Call it as outstanding expenses. But if you call it as outstanding expenses, expenses to accrued expenses, outstanding expenses. So it is not shown as dues to MSCs. Dues to MSC, it is shown as outstanding expenses. What if the assessing officer asks you, give me the breakup of outstanding expenses, and within that, how much is dues to MSC? I'm just playing the devil's advocate. So, no, if you say that there is no service rendered, all the more reason for it to be disallowed. All the more reason for it to be disallowed. Yes. No, that's what she said. Okay, sir. See, in accounting standard, we have something called materiality. Audit fee is not material. Very interestingly, in ICDS 1, they don't use the word. See, there are 3 things which are used in fundamental accounting concepts or assumptions, what they say: accrual, prudence, and materiality. Whereas when it comes to ICDS, they use the word only accrual. Prudence, they don't want you to be prudent. What is the meaning of that? That means you are expected to make a loss next year. You have to provide for it now, according to accounting standard 29. That is not allowed in ICDS, income tax. Similarly, materiality. That means if it is not material, ignore it. It gets rounded off, and therefore crores also can get rounded off and ignored for accounting purposes. For tax purposes, everything is material. So that's why I'm just leaving that thought, but please take care of this particular situation. So this year onwards, last year itself, the inventory, all of us know 142A, where there can be a 142.2A, where there can be an audit, special audit by a chartered accountant. They introduced the concept of 142.2A2, where there can be a valuation on the inventories by a cost accountant. Not in all cases, but wherever the department feels that inventory has to be properly valued, they can employ a specialist, and that specialist is a cost accountant. Therefore, close the video. Closing stock cannot be a balancing figure. Closing stock be serious. You know, how much is the, somebody said, I bought this cooker for 60, 70, 80, 90. That particular slide you missed. 60, 70, 80, 90. Then the serious person will say how much you want it to be. You know, depending on what you want it to be, I can show you the, but that cannot be the case in the case of inventory valuation. So you properly have a justification. Yes, cost accountant appointed by the department. No, only when they have, it could be either a search or a scrutiny where they get a doubt. They will appoint, because they are not specialists. No, yeah, that is what it is. You are supposed to preserve the history. He will go through your history, and if your history was a mystery, then it is a problem. You know, this is appointed by the, yeah, and he has been given a format. Just like 3CD, 3CA, we are having lot of sessions. Institute of Cost Accountants of India has, I mean, now they are called Institute of Cost and Management Accountants, ICAI, Institute of Cost Accountants of India. That's the same ICAI. No, sir, it is now the Institute of Cost Accountants of India. Change that. Anyway, the point is, okay, 6D, this is the format in which they have to give the format. Okay, this we have already seen. Yeah, this is what I was talking about. I am talking under the Direct Tax Committee of ICAI, this is, and Direct Tax Committee of ICAI first edition handbook on estimated income. They say whether aggregate receipts and aggregate payment includes capital receipts and payments. You know, for the purpose of that 5% wala. That 5% wala, let us be very clear. It is 1 crore, 10 crore for business, and 1 crore, 10 crores for business, 44AB. Now, when it comes to specified professional, it is 50 lakhs, right? Anything more than 50 lakhs should be subject to. Up to 50 lakhs, you have the benefit of offering 50% presumptive tax. Now, for no, presumptive tax, 50 lakhs has become 75 lakhs if the receipt is less than 5% in cash. Okay. Whereas 1 crore and 10 crore, for the purpose of 10 crores, both receipt and payment. For 75 lakhs, only receipts. Similarly, 2 crores has become 3 crores for 44 AD if your receipts are less than 5% in cash. That is applicable from this year. TDS is, yeah, that is 194R. Yeah. No, why are you linking, see, 44 AD ke liye 50 lakhs is different limit. Please understand. No. One more thing it is to be understood. For 44 AD, no, AD also I am saying 44 AD or ADA, is disallowance under 40A 1A applicable if you come under presumptive taxation? The answer is no. But does chapter 17 be applied to you? That is the answer. You may be out of 40A 1A disallowance. If you are a firm, you may not maintain your books of accounts, but you have to do your TDS, notwithstanding 40A disallowance not being applicable to you. Okay? So what I was telling is the answer is no on that. That means you are supposed to, since the clause says amount received for sales, turnover, or gross during the previous year, say amount incurred for, therefore the amount received towards sales and payment made against expenditure should only be considered, only whatever. It's the wrong thing. So I already spoke about this. Tax auditors, be aware, 10,000 penalty under 271J. And now it can go up to 50 lakhs from NAFRA. Your audit fee, form 10DA fee only 10,000 rupees. 50 lakhs. Please look into the implication. That's what they say. 971 crores was the claim in the 3 years period. So therefore, considering that 50 lakhs was very less. Government lost 250 crores. Yeah. This is what is the case of that. CA fined 50 lakhs in Quest Corp tax matter. Okay. This was warm up. This was warm up. Now I am coming to the topic. Excuse me for taking a very big warm up. Anyway, we have got another half an hour. Let me try to complete as much as possible. Otherwise, Panaraj sir is still there till February 18th. I'll come back. Yeah. This is the topic. I wanted this topic to be highlighted. Originally, it started with accounting income and taxable income. convergence and divergence. Oh, yeah, sorry. Yeah. I have the next successor also here. So next February 18th, okay, I can still come back. Maybe the next successor is also there. Okay. So accounting, where is Arun Garu? Sir. Next successor is also there, yeah. So accounting profit and taxable. Sir, please understand, we started with accounting income and tax. The topic was accounting income and taxable income. Now I am changing it to slightly accounting profit and taxable income. Sir will understand this better because trusts may, these words make a lot of difference. We don't go by income and expenditure and profit and loss account in trust. We go only by receipts and payment. Now today trusts means receipts and payment. You don't look into anything else. Everything else is can be given by receipts and payments is the only thing that has to be seen. Having said that, in accounting, we don't use the word accounting income. Correct, sir? We use accounting profit. Suppose I use accounting income, then it is for a non-profit organization. Right, sir? Income and expenditure is for a non-profit organization. Whereas in income tax, please look at this. Income means, again, Palgun Kumar sir is there. Income means anything which is credited to your P&L account is income. Therefore, income and expenditure, when we say excess of income or expenditure only we say, or excess of expenditure or income. Accounting, we use the word profit. In tax income, please understand, income tax, we use the word income. Now tell me, in income tax, are we taxing the profit or the income itself? It is what they say is, we are going to tax your income and allowing you certain expenditures. Allowing you certain expenditures and disallowing you certain expenditures. This is the Vishwarupa of the, when I call every time I prepare one new slide. All the slides which I showed till now were all, what should I say? No, it was carried forward from the earlier thing. This is the one which is very hot, done for Pandaraj, I would put it that way. Okay, so income from business. I mean, I just imagined a profit and loss account, and this is a slide which is like a profit and loss account to the income tax department, purely. So what it has is, anything which is in red has to be taxed. Anything which is in blue is cool. And I always say, in world, there are only left and right, red and blue, Coca-Cola and Pepsi. You see that? Coca-Cola is always red and Pepsi is always blue. So red is what is subject to tax and blue is what is put as a deduction. Okay? So income chargeable to tax under profits and gains of business under 28. 28, what is 28 dealing with? Very interestingly, sir, 28 starts with, if you read section 28, it has got a big list. It starts with profits and gains of business only again. No, that is a topic which, for whatever it is where you are missing, means again it starts with profits and gains of business. One of the important things which is covered there now is perquisites received in kind, which is now subject to 194R. Right? 194R. What is 194R? TDS on perks. Perks or benefits. If in the course of business or profession, if any of the client comes and gives me one golden, like this, he gives me a 10,000 rupees check, no TDS, and then puts me a golden and claims it as an expenditure, then that expenditure will be subject to 194R, anything more than 20,000 rupees, if it is paid in the course of, and then I have to show it, because normally I was never showing it. The biggest culprit under 194R is taking the dealers to Maldives - Lakshadweep, right? So they used to take all the dealers to wherever that is, and then they were to claim that as an expenditure in their books. Now it is very clear. 5 days conference. 5 days conference. Now only they take them trip for 5 days, but only on day 3 the conference is held. Husband and wife allowed. Assuming that 1 lakh rupees is the expenditure every day, what they said is the day of conference will not be counted. Day before and day after will not be counted. Other 2 days, 2 lakh rupees, plus all 5 days for the spouse. So 7 lakhs ka upar he has to make a TDS on the other person. and the other person has now got to show 7 lakh rupees as income because he has shown it as TDS. Otherwise, it would have gone out. So that is the implication that is covered in 28(4). No, the auditor of the company which has taken the dealers, let us say in this case some cement company or some drugs manufacturer company, the auditor, the company has to calculate this. There is a circular which has been told, I don't remember the number, the circular has very clearly told how it has to be calculated. The monetary value has to be seen, how the cost, selling price, they've given a lot of calculation mechanism. So based on that, it has to be done. So you are supposed to know, but definitely through 26 days. He has not filed the quarterly TDS return, you will never know. So normally this happens in, sorry? Yeah. Yes. Yes, yes. No, he is supposed to file it on quarterly basis. How will you know? You have gone, no? You are supposed to know the law. How will you know means you have gone. I mean, point is the chartered accountant has not gone. The client will not tell. That is right. Yeah. How will you know as a chartered accountant if you ask? You are right. Yes, you are right. But then he is the sufferer. Please, I am very clear. I don't take tension more than the client. No, if he doesn't, my job is to warn him. Afterwards, if he doesn't warn, if you take his tension, he will be in Maldives, you will be here only. Okay, profits chargeable to tax, section 41. Please be careful. Under section 41, even in tax audit report, we have to say, section 41 consists of 3 subsections if you go through. One of them is remission of liability. Second one is for power companies. Third one is for bad debts recovered. Bad debts recovered. Bad debts, you can write it off as an expenditure. When it is recovered, you will have to offer it for tax. But the point that is coming out most of the 143(1)A additions is 41. You will see it in your tax audit report. You have to show what is the amount of remission of liabilities. Suppose some 30 lakhs is shown and it is already credited to profit and loss account. The 143(1)A addition says, again, they will add back 30 lakhs. They'll add back 30 lakhs. Then you write it to them, they will never do. We are now in commissioner appeals for that, and commissioner naturally allowed it. Should we go to the commissioner appeal for such a small thing? So what we have done in our office now, I am telling you, is that whenever there is a credit to P&L account and a TDS, I mean in tax audit report, you're showing 30 lakhs. In your computation of income, you deduct and add. You deduct 30 lakhs credited to profit and loss account, not being a business income, and add under section 41, 30 lakhs. Then it will understand. Then we are safe. It is like T.N. Manoharan, I don't know whether I told you this. T.N. Manoharan had told one joke about, one story, saying that he received a bill, saying that the bill was for ₹0. Electricity bill was for ₹0. He said ₹0 means I ignore. He ignored. Again, reminder came, pay ₹0. Otherwise, it will be disconnected. He laughed at it and he ignored it. After 3 days, it disconnected. Then he said, how to do? He said, nothing doing. In the check, you write 0 amount, and because understand only that. So we are now in the computer age. So if you say 0 means you should pay 0. Okay. Full value of consideration of transfer of assets other than capital assets in certain cases, 43 CA. What is 43 CA? It is the equivalent of 50C for real estate businessmen. People who are in real estate business, for them, if I sell an asset flat, I don't know, Brigade, whoever is the builder in Chennai, if he is selling a flat worth 2 crores at 1 crore 75 lakhs, the sub-register value is 2 crores, he has to put it in his profit and loss account 2 crores only, not 1.75. Then as an expenditure, what are you allowed? Rent, rates, taxes, repairs, insurance of buildings. Repairs, they say very clearly, not being capital repairs, current repairs only. Repairs and insurance of machinery, plant and furniture, no dispute there. Depreciation, 32 depreciation. Additional depreciation of whatever, 20% is allowed, next year 10%. Depreciation is a compulsory claim. Even if you did not claim it, this is where assessing officer is supposed to give you, or it is deemed to be allowed. And depreciation loss is such that it can be allowed perennially. There is no expiry date for unclaimed, unabsorbed depreciation. Other deductions. And this is a very serious one. 36. What are the popular 36 deductions? 36(1)(3). Interest. Very interesting. Okay. Only thing you have to notice, any interest on capital asset cannot be claimed as a deduction till the asset is put to use. The difference between 36(1)(3), including ICDS, and accounting standard is, when it comes to accounting standard 16, they go on to say that interest can be capitalized if and only if, IFF, science, mathematics, IFF, if and only if the asset is a qualifying asset. And a qualifying asset is one which takes substantial period of time to complete, which is 12 months. Whereas here in income tax, 36(1)(3) or 43 or ICDS, any asset till it is put to use has to be capitalized. It may be for 3 months also. Suppose I am constructing a building for 3 months. The loan I have taken, the interest on that, I have to capitalize it for income tax purpose. For accounting purpose, I have to debit it to P&L account. Am I clear? So 36(1)(3). Now 36(1)(5). What is 36(1)(5), madam? Approved gratuity fund. Please, two things. Approved gratuity fund. Any contribution that I do to an approved gratuity fund created through a irrevocable trust. Now my question is, if I am making, the gratuity, this is what is gratuity, I am paying it directly to LIC. Should it be an allowable expenditure? Gratuity which I am paying. See, please note 40A7. Section 40A7 disallows. There amounts not deductible, section 40. Section 40 disallows any provision for gratuity unless it is paid to an approved or it is paid to an employee in the year of retirement. Now we are creating a provision according to AS 15 and transferring it to LIC. Does it comply with the requirement of 36(1)(5)? Yes, sir. No, have you created a trust for that? If you have created a trust, it is fine. Then it is fantastic. Are we doing, all of us doing? I am not doing in so many cases. No. If you are doing it, you are by the line perfect. I am not perfect, but still I am claiming it. Yes. No, sir, it accepts. Anybody who has done with LIC trust? Sir, you have done it without trust, right? We have done, sir. It is possible. Sir, you have been dealing with some officer who knows the rule. There are a lot of people who accept it, and we have done so many cases without trust. Answer is very simple. There is a, in fact, Coimbatore, somebody raised this point. Somebody raised this point, a senior chartered accountant, saying that without creation of trust, 36(1)(5) says it should be approved gratuity, irrevocable trust. If you don't have a approval and a trust, even if you give to LIC, it will not be allowed. Fortunately, there is a Supreme Court decision which says, now Coimbatore case only, text tool, where they said that it is, even if you have created with LIC, because it is not going to come back to the company, to that extent it is irrevocable. Even without creation of a trust, it can be allowed. 36(1)(5)(a). What is 36(1)(5)(a)? Most serious. Now, before we close the day, I wanted to give you one big sweet. Because 36(1)(5)(a) is the one which is now hitting us most. Which is hitting us the most. I forgot to tell you one thing here, accounting profit and taxable income. Right, sir? And then I put a hash and put a hash. Deferred taxes for other than PD. whenever there is a difference between accounting profit and taxable income, if there is a for reasons other than permanent difference, which means either it could be timing or temporary differences, you create a deferred tax liability. The entire how this particular thing came out is AS 22. I was talking in so many sessions, and for talking about AS 22, you need to know accounting and taxation, and you have to walk the fine rope. And between accounting and taxation, I always have the craze for words. We have a common guru. Me and Panaraj sir had a common guru, Dr. Sheshadri, who was a connoisseur of English, I should say. He had the play for words. So what is the opposite of permanent, sir? Temporary, right? For accounting standard 22, it is timing. For opposite of permanent is timing. In Ind AS, it is temporary. Now, what is the opposite of temporary? What is the opposite of temporary? Permanent, no. The opposite of temporary is other than temporary. You know where these words are used? In accounting standard 13, they use this word that all investments have to be classified as either current investments or long-term investments. Current investments have to be measured at cost, lower of cost and net realizable value. Whereas long-term investments have to be measured at cost unless there is a decline in the value of the investment for reasons other than temporary. So which means there is something called temporary, something called permanent, and something in between. So temporary, other than temporary, and permanent. So beautifully they have used this word. Even in India, they use the same word. The reason for that is just like what we changed fixed asset to property, plant, and equipment. You know why did they change fixed asset to property, plant, and equipment? Huda sir? This is what? No, you know. It is not fixed. You know, when we used to talk to non-finance people, where do you take vehicles? The vehicles under fixed asset. No, you are wrong. It cannot be under fixed asset. It is moving. So to bring sense to that, they said, somebody did a, like this, they did a PhD and said property, plant, and equipment. Now, having said that, coming back to where we started, other than temporary. Now, if you say, if I've invested in a company for 100 rupees, and the value has now, and it is a long-term investment, the value has now become 70 rupees or 7 rupees. It has become 7 rupees. If I say that it is, if for reasons, if it is a permanent, then you down to 7 means I will never bring it down to 7 because they will always say permanent to nahi hai. So then they brought it saying that for reasons other than temporary, you will have to bring it down to 7. So temporary, other than temporary, and permanent. And that is how it happens. So where were we? We were on this particular 3615A before we close. Provident Fund and ESI. What is the way out? If you paid it on 16th instead of 15th. Is it a timing difference? I mean, permanent difference or a timing difference now? How is it a timing difference? 15th ka you paid on 16th. Accounting mein it is expenditure. For income tax, it is never an expenditure. Sridhar Garu, to put it in your words, PF or ESI, what is the last date? 15th of the subsequent month is the last date. If I don't pay it on 15th, for employees' contribution, let us be very clear, PF and ESI has got two elements, employer's contribution, employees' contribution. Employer's contribution is allowed under section 43B up to the due date of filing the income tax return. Employees' contribution is allowed as a deduction under 3615A. Only up to 15th. If you paid it on 16th, it is never allowed as a deduction. Now 3615A has to be read with the section 22410. What is 22410? Please note that when I am paying a salary to my employee, 10,000 rupees I pay, and put my contribution of 1,000 rupees. So totally 11,000 rupees I debit it to my P&L account. 1,000 is my contribution and 500 rupees is his contribution. I am paying him how much? 9,500 rupees. Cash is 9,500 rupees. So 10,000 rupees, 1,000 rupees I pay to the account. And the moment I deduct 500 rupees from him out of this 10,000 rupees, it becomes an income in my pocket under 224(10). It becomes an income and it gets allowed under 36(1)(5) as an expenditure if it is paid within 15th of the subsequent month. There were a lot of court decisions to say that employees and employers are the same. Therefore, it should be allowed until the due date of filing the return. There was Karnataka SA Terwaka case and it went on. And finally, Supreme Court gave a checkmate. Those of you are aware, checkmate case only. Interestingly, Sridhar Garu, checkmate is a customer of Karnataka Bank. I was sitting in the executive committee and sanctioning some loans. I was cursing him. Because of him, so many chartered accountants who had won their cases, all that we had to do in the tribunal was stand up. Sir, this is a covered case. Bolke, we had to sit down and, that is how it was happening. Now, what Nirmala Mami did, you know what she did? She brought in a clarification to say that employers and employees are always supposed to be different. And then the question came whether it is retrospective or prospective and all those stuff. Anyway, the point is, now if you pay 15th or 16th, it is not allowed. Is there a way out? Is there a way out? There are two ways out still, if possible. Okay. Last 10 minutes, I will tell you the good news and close. One way out is, how did the disallowance happen? Please look at this. If it is by virtue of 143(1)(a), most of our disallowances are to 143(1)(a), because in the tax audit report, the auditor would have told due date is 15th, paid on 17th. 15th paid on 17th. So 2 days disallowance permanently. Sir, you might note that some of the disallowance companies have not paid. Every month they would be paying 16th, 17th, 18th for technical glitch or for financial problem. Okay. And overall, if you take overall, it can come to 30 lakhs, 40 lakhs, 50 lakhs. It can come to a big number, and disallowance of that may lead to a big problem. Now, if it is by virtue of a 143(1)(a), where additions have been made, you can challenge it on the ground that this disallowance cannot be under 143(1)(a). Now you look into 143(1)(a). What are all the adjustments which can happen under 143(1)(a)? Any disallowance pointed out by the tax auditor can be added under 143(1)(a). Did I, in my tax audit report, tell that it was a disallowance? I am only giving a matter of fact that this is the due date, this is the date on by which he is implying that it has to be disallowed. What is to be implied cannot be taken on law unless it is specifically told in the law as such, because what is told in the law is, has the right disallowance brought out by the tax auditor can be a matter of adjustment under 143(1)(a). Right? Yeah. So she's silent, which means I'm right. So under 143(1)(a), since the auditor has, please note, this has been held in the Karnataka tribunals also. In the so many tribunals it has been held that it can be good to go. So objection number 1 is like this. If it is 143(3), when I told this in my office, my son immediately said, what if they now put a 143(2) notice? By then the time barring has happened. So he cannot come under 143(3). What if it is already under 143(3)? Then you don't have a way out. But for that also, I will tell you one way out. For PF, let me tell you, January month, I paid the salary on February 1st. What is the due date? 15th February or 15th of March? You agree with that? All of us thought 15th February. January month salary, I pay on 1st of February. Okay, saying 1st February, 7th February, 10th February. 15th February is the due date or 15th March is the due date? That is the question. All of you in your tax audit report, all of you, we don't look into the tax audit report. Our junior prepares it. Now, of course, we have to have very seriously and tell, yes, sir. When his deduction was made. Correct. How are we doing it practically? Most of the tax audit reports, when I see that January month salary paid on 1st February, the auditor is showing due date is 15th February. And it is paid on 16th February. So therefore, you're getting caught and bold. As sir rightly said, for the purpose of PF, the word is payment. 15 days from the end of the month in which it has been paid, deducted or paid. But for ESI purpose, sir, the answer is different. It is linked to wage month. ESI, it is linked to wage month. PF is linked to date of payment. So that is a beautiful thing which you can make use of for your purpose of argument. But now the question comes, if it has already been shown in the tax audit report as 15th February, and it is paid on 16th February, what will you argue? Absolutely. You can still argue. See, a right cannot become wrong just because the report is wrong. So we'll have to prove that as a basis, saying that, Your Honor, the chartered accountant has mistakenly misinterpreted, or his junior in the office has misinterpreted. So I have come to you for justice. The justice should go beyond the reports. Justice should go by what is there in the law. And I am proving that the law is 15th of March and it is a mistake in the report. So please allow me, you should be giving me justice. I think that is the answer in which we have to argue. So 36(1)(5)(a). 36(1), any other popular 36? Yes, sir. 36(1)(7). 36(1)(7) is a bad debt. 36(1)(7)(a) is for banks. Provision for bad debts is allowed only for banks. For 36(1)(5), bad debt means just because you write it off in the books of accounts. Sometimes the assessing officer say, what steps have you taken to recover the bad debts? You can write to him, I have not taken any steps. Kya kar leta kar le. I mean, you can just write like that. I have written off in my books of accounts. That itself is sufficient that it should be allowed. So that is the sir, whatever it is, right? Yes. So you can still, but the only challenge is, he may approach the other person and ask you to offer it under tax under 41. Possible. This has actually happened that you have claimed it as a bad debt and he has come to the other party and told, you have not paid him. He has claimed it as a bad debt and it is now more than 3 years. More than 3 years. So therefore you should offer it under tax. There we said, what he has done, he has not told me. Ask him to give me a waiver letter. Ask him to give me a waiver letter, then I will offer it for tax. And question of 3 years, please understand, law of limitation means what? I am saying that I am not, to the bank I have told I am AOD. Here I am carrying it in my books saying that I have to pay. So therefore, the fact I'm carrying it in my books shows that I am payable. So you should not force me to come under 41 is the point. Okay. So expenses or payments not deductible in certain circumstances. 40(a)(3), Rule 6DD. Rule 6DD may paid on Sunday, paid on a holiday. Is it allowed under Rule 6DD? We used to take that Shakranti day, banks were closed. So therefore, Rule 6DD may, that was one of the things which could have been done. Now there is no such thing. Banks may be closed, but transactions can still happen. So therefore, on a bank holiday or in a, all those things are now gone. Expenses or payments not deductible on certain circumstances. Certain deductions to be only on actual payment. 43B we have already seen. This is the 18th slide, 5 o'clock. Okay. No, sir, I will not tell you. I will not tell you. But I always stop at 9 or 18 or 36 or 45. So with that, I can only thank Mr. Pannaraj for giving me this wonderful audience and wonderful opportunity of interacting with you and highly honored to be there in the midst of all. No, I'll just put up my mail ID in case anybody wants to write to me. You can. Mm. Yeah, and this is one of my favorite quotes, which gives the essence of Bhagavad Gita, which is, give me the serenity to accept things which I can't change, the courage to change things which I can, and the wisdom to see what I can change and what I cannot change. One of the beautiful quotes. If I think we follow this in life, this would be a great, because sometimes we feel dejected and God knows what, one of my partner's father died yesterday, and I had to only tell her that whatever had to happen has to happen. So you must only have the serenity to accept things which you can't change, the courage to change things which you can. And if you can make a difference, you should really fight for it, and you should not lie low and accept it like that. And the wisdom to see the difference. Okay. So with that, I close my session, and you have my mail ID as acharya@kgacharya.com. So most welcome to write back to me. Thank you so much. Thank you, sir. Thank you. Working?
Before we close for the day, I have seen Mr. Gururaj Acharya very closely as he introduced himself ever since 86, 87. I was qualified in 87. I was taking classes for 4 or 5 people, or around 8 people classes. Then I was to take the classes of accountancy and cost accounting. I became a costing teacher because of R. Shivakumar sir. So I wanted to just recollect him now. He paid respect to his teacher. I am paying my respect to my teacher, Mr. R. Shivakumar, who made me pass the examination and also made a teacher in cost accounting. So that's how I could take it forward to 3-4 batches at a small town like Ballari. There is a saying of a long time I am using again by Shakespeare. It's always proud to be father of an overachieved son, but not the reverse. It's always a curse to be son of an overachieved father. Today, I'd apply that to a teacher and student. I'm very proud that my student has excelled to this extent, and he has proved me right that none of you will complain that I have brought him as a speaker just because he was my student. Do you agree? So no related party transaction here. So for which, as a student, I am indebted to him to such an extent that in the process, he has made his teacher so proud. And I have been learning now from him with the days of 86, 87, 88 of teaching him. He was learning from me, and now I am learning from him. So that's the greatest contribution a student can give to his teacher, for which, on my behalf, please give me a very big round of applause. Only one addition to your terminologies, you are using so many words, PT and all. I'll add one to your, this one, 269 ST. You used PTE and O. I have coined it as a poet. You can, hereafter you can use it as poet. P for person, O for occasion, E for event, and T for transaction. Yeah. So this is an addition you can have. He started from you are using a poet, you can use for 269 ST. So this is how that Jugalbandi we used to do I remember only one thing in my class, that I used to keep Companies Act while teaching company accounts. So company provisions, the issue of shares, premium, and debentures and redemption of shares, all these things we used to do along with the Companies Act on hand. So that's how we were. It was almost like a discussion with each other. So you started off so well today that Nandi Steel case will be a very, very big takeoff. The takeoff was so beautiful that you made everybody alert. You proved that you did not allow anybody to sleep. Rather, I became extra fresh to be clear on that. So on the small companies, provisions to be seen, audit trail, and the reporting on audit trail, all these things are so important, for the simple reason that being chairman, I have been seeing so many disciplinary proceedings happening in the SIRC. These are the very reasons. I think I have not told you about these things. These are the very reasons for which they are under the net of disciplinary proceedings. 30 cases will be taken in a single day. I would speak to, whenever I am here, if the proceedings are happening in Chennai SIRC, I would speak to at least 15, 16 people. Most of the things, most of the mistakes are this and or. You're telling and or. So like this, small things, and also certification, not taking NOC from the previous auditor, like this. And other than that, the drafting mistakes in non-corporate entities. So I have coined one topic and telling every small and medium practitioner that you should do workshops on accounting standard and auditing standards reporting side. How the draft should be, and what are the terminology that should be used, and how it should be drafted. Most of us will not write the notes to accounts at all in tax audits, and definitely that will be cause for disciplinary proceedings in the future. And also, very importantly, documentation that is required under auditing standards. And these are the things which are to be taken up by the speakers locally, and do workshops on those things. If at all you have study circles, you please do on those things. And you have proved us right in taking up this national conference in shortest time, after the compulsion of completing the CP hours, number of hours by 31st December, because of the topics and the speakers. So tomorrow also will be of same what's called quality and the caliber, and the presentations will be so good, and there will be so many takeaways. And for that, it is not enough if you just watch you are present here for these presentations. I request you very humbly that all the recordings will be shared to you by mail. Please watch them again and again, daily, 10 minutes, 20 minutes, like that, in smaller doses, so that you can consume it better and also implement it better. Thank you very much for this one. Special thanks again to Gurraj.
Thank you, Gururaj Acharya sir, for the wonderful presentation. You have made your points reach our members in a more fun-filled way. May I now request C.A. Adhyambi Geeta, the first Vice Chairperson of SIRC, to present a memento to our Gururaj Acharya sir. There's a special memento from Palguna Kumar sir also for Gururaj Acharya sir. Yeah. So with that, we have come to the conclusion of the first day of 2 days National Conference on Direct Taxes. Tomorrow, we have sessions on issue in SME taxation, which will be handled by Ramnath from Coimbatore, and various remedies to challenge income tax assessments by Kapil Goyal from New Delhi. kindly assemble at this hall tomorrow sharply by 9:45 a.m. May I now request SARC Secretary A.V. Arun sir to formally propose vote of thanks.
Good evening, members. Thank you for attending today's program. I welcome you all tomorrow morning, sharp at 10. We'll start as usual. Today we'll start at 10 tomorrow morning also. Thank you. Thank you all.